Thanks everyone for joining this morning or this afternoon, depending on where you are. My name is Shah. I'm the co-founder of Stoic Capital Management, based in Palo Alto, in California. I'm pleased to have Sarah Friar and Mike Doyle from Nextdoor here joining to have a chat about the business, the future of the industry, and so forth. I thought maybe I'd open it up with a few comments just to start with. About why we think this is an interesting opportunity, why we're excited to do this, why we've been wanting to do it for some time. One of the best tools we rely upon as investors is pattern recognition. And at Nextdoor, we see a great deal of parallels between the monetization journey that they're on and what we've seen out of other social media companies in the last decade plus. However, we also recognize investors tend to be drawn to the shinier things that have maybe high engagement, used by teenagers a lot, viral growth, and they kind of just make the assumption that monetization is easy and will follow that. Conversely, investors tend to be skeptical of those that have maybe less frequent engagement, but engagement that could be deeper and easier to monetize. And so, we're taking the other side of that bet here. We think Nextdoor has some key advantages that are going to become apparent over the next couple of years as they roll out their ad platform, one of which is their users are more commercially motivated when they're on the platform. And that's a large part of the reason they're there to begin with and why they visit more and more frequently. Two, we think Nextdoor generates a lot of valuable first-party data on the platform, thanks to the interactions that are taking place there. And that is especially going to become more and more relevant and more important and differentiated in the privacy-focused world we're entering into. At current levels, we think there's a lot of asymmetry in the stock. We think given the company's balance sheet and the business model and unit economics here, the business has a lot of latent earnings power underneath it. And finally, and perhaps most importantly, and probably the thing that I think is going to become most evident on today's call, is we think very highly of the management team at Nextdoor and the board behind them and their ability to execute. So on that note, thank you, Sarah and Mike, for taking the time to join.
Thanks so much, Raj, for having both of us here.
Absolutely. So I'll start off with some questions and dive right into it, but I'm going to be monitoring my inbox as well. So if there are participants who want to send questions based on the conversation over to SumZero, they will make their way over to me. So I'll make sure to include them. The way I'd love to do this is maybe perhaps a bit differently than the format of a traditional fireside chat at a sell-side conference. I think, there's obviously a lot of information that the company has done a great job putting out there about what the business is and how it works. So maybe we can skip over that and jump right into the things that I think probably matter most for investors, which is monetization and the path to that, and then ultimately profitability, which is obviously related. It's clear on paper there's a monetization gap between where Nextdoor is and where its largest peers are. And I think the company has actually put slides in its decks even from when it came public to today. So what I want to spend time on today is understanding what causes that gap to close and how to think about the drivers there and what we as investors should be monitoring. So maybe Sarah, and I know you're a little sick from coming off of a lot of travel, so feel free to direct these, or Mike, take them to the extent it's more relevant for you. Maybe we can just start with user growth. Sarah, I think you mentioned it was in the last couple quarterly calls or at a conference or two. Nextdoor is one of the only, if not the only, social media platform to really be able to continue to grow off of its post-COVID peaks. And so on the one hand, you are growing faster than your peers. On the other hand, it's obviously off of a smaller base. I'm curious just to dig into that a little bit deeper. The company's been around for a while. The growth of Nextdoor has sort of been one of steady compounding user growth, as opposed to the kind of the hockey stick growth that a lot of people I think are used to from earlier stage social media platforms or internet companies. I'm curious to think about, why that is. Are you spending behind user growth? Are users coming organically? Maybe you can talk a little bit about that to start with.
Great. Thank you, Raj. And yeah, thanks everyone. Usually I'm like 5 a.m. out of bed. My sell-side genes are still a little strong on that front. And I am a little lagging today. I can't remember the last time I felt a little sick. So bear with me on that front. But I know I've got a really good wingman in Mike, so he will definitely step in too. So yes, on the user growth front, let's start there. We'll probably come in a moment to just the why of Nextdoor, but it is definitely worth noting that we are a platform that COVID clearly gave us a bump. It gave a lot of social media, just internet type stocks generally, a huge bump, but we continue to grow off that. And in fact, if you look since Q1 of 2020, we've actually grown WOW weekly active users 72% and US WOW almost 60%. So we have continued to grow on top of what was a spike for us, because I think we showed in that moment to neighbors everywhere the high utility and then also the community value of Nextdoor. I often say we're an incredibly engaged platform. Once we get you, once you know about us and hit the top of funnel and come join, and I'm going to talk about the heartbeat of Nextdoor in just a second, we're a very engaged platform. So 50% of our verified neighbors come back weekly. 50% of our weekly actives come back daily. In fact, it's a little bit more than 50%. It's 4 out of 7 days they come back. And 2 years in, 50% of verified neighbors are still active. And when I notice it when I'm hiring, so when I'm talking to people who might be coming from a Twitter or a Pinterest or a Snap, they're really wowed by those numbers because they are better than those other platforms. And why would that be? I mean, a lot of it is the value of what we do. Once we get you into Nextdoor and you can see the value of what's going on around you locally, there's almost something to do every hour of the day, every day, that's going around you locally. Like, what's that noise? Or do we have a hurricane blowing into town? Or I need a plumber today, right? The list goes on of all the reasons you come to Nextdoor. I'm going to talk a little bit about, you asked kind of how we invest, how we grow. So think about Nextdoor, think about the funnel. It's a very kind of tech term to use, but how do we get people to come in the top of the funnel and become that verified neighbor? Well, first and foremost, there's kind of 4 areas I'm going to go through. There's organic, so people who come because word of mouth, they hear about us. There's paid, and I'll talk about that. And then there's 2 loops in our ecosystem, an invite growth loop and then a content growth loop. Let me start first of all with organic. We are absolutely continuing to trend up in terms of overall brand awareness. In the US, we're now in 1 in 3 households. In the UK, we're in 1 in 4. And what that does is you just become part of the conversation in the neighborhood. People will say, oh, you just moved here, you should get on our local Nextdoor. Or we end up in kind of the zeitgeist of the moment. Like if any of you have been watching Netflix recently, I feel like every Netflix show I turn on somehow has a Nextdoor moment going on in the middle of it. Jimmy Kimmel.
Yeah, that show Beef. That's a great show.
Exactly. Yes. Yeah. So Beef is a good example. And so all of that helps. We, of course, do invest a lot in areas like earned media. When we can find a story that's really starting to trend, it often ends up in local media. There was a story last night in the San Francisco Chronicle. It's kind of a tearjerker, but a local man who is dying of cancer. He's in hospice care right now, but he was a photographer. He loves to put great photographs on Nextdoor. When people realized how sick he was, they've started to put photographs back on to effectively say, thank you. You know, you brought light into our neighborhood. Now we want to bring some light to you. And of course, local paper picked that up. It's an amazing story. Those are posts I've seen as well, even though I live up in the North Bay. So there's a lot of earned media. And in fact, organic growth has been running closer to 80% of all the new neighbors added have come organically. I'll go to paid because it's kind of the opposite side of that. When do we pay? How do we pay? So if we pay to bring neighbors to the platform, it's really in 2 areas. Number 1 is we do our own performance marketing to get neighbors to join. And we'll often do that in new countries where we're still kind of in the cold start moment where we need to get a critical mass. The way we typically do that is a very unique to Nextdoor channel called the invitation loop. So these are paid invitations. So if we will ping you and say, hey, would you like to invite 100 more neighbors? If you say yes, then we'll actually send a letter on your behalf. It's snail mail. Turns out it's very neighborly. It performs incredibly well. And it's very scalable. If you think about it, we're not stuck in like a Google channel, an SEO channel, where we're somewhat to the whim of a Google. This is our channel and we're super efficient in it. But when we're in a time where we're controlling costs, we often kind of cut that spending down to just keep managing our costs. But we know there's a good ROI on that paid. Partnerships is the other one that we've done some experimentation on, coming preloaded on, for example, Samsung devices. It's not massive for us. I think we'll just continue as we grow to do more of that. It's typical what other sites do. Let me talk finally about the two loops that are actually part of our ecosystem. So invitation growth loop, this is in the platform itself. So not the paid invitation I just talked to, but rather how do you do it all using bits and bytes so it's effectively free. And one is neighbor to neighbor, and two is what we call business to neighbor or organization to neighbor. On neighbor to neighbor, we've been doing that for a long time. When you're in the app, you'll often see, hey, would you like to invite someone? A couple of years ago, we launched something called Connections. Connections allows us to contact sync your address book, and then we end up with a full repository of people, some folks who are already on the platform. So that gives us signal of who you might want to hear from. That story I just told you about, Robert Stanke here in San Francisco, the reason I've seen his posts is because some of my connections in San Francisco have been reacting and talking to him. And so therefore that content carries further because my connection is interacting with it. We inference that therefore I might be interested in it. But that we also end up with a whole repository of people who haven't joined the platform. And now we can send an invitation electronically to say, hey, Raj, your friend Sarah is on Nextdoor. Here's something that just happened. You might be interested in joining. And of course, with generative AI, which I know we'll get to, we're now able to make a lot of those invitations more and more personal, so they perform better. And then the second is business to neighbor. Why would a business invite neighbors, effectively invite their CRM? Because when they get more faves, which is a way to connect to a business, or more recommendations, they do better. They show up better in search. They do better when it comes to even landing on their page. People are more likely to respond to their call to action. And then finally, the growth loop that drives people is when content is created on the platform, we are able to notify people. So we send out a notification. We can put things into SEO, like best places, what are the local gems that neighbors are talking about? And then finally, that's another place where we've invested a lot in partnerships to put our content out onto other people's sites. And the best example today I would talk about is Bing Local and MSN, where if you're on those sites, we perform really well. Like we're literally their premier type content because it's very dynamic, super local. And when people click on it, they see the post, but at that point we invite them to either join or log in. So it drives both engagement and it drives new signups. So that was a lot, but I wanted you to explain that it's a layer cake approach, but that's why we've been so successful in growing.
And if we put a headline on it, on all of that, and it's very helpful detail in terms of what's paid and unpaid, and call the unpaid organic or whatever you want to call it. What percentage of the user of the ads in WOWs are coming from that sort of non-paid channel? Maybe overall,
in the last couple of periods, it's been 70 to 80%. Again, because we've taken down a lot of our paid spend to keep managing our EBITDA, but we can keep growing without that EBITDA. And in fact, unpaid VMs grew 29%. year over year. It's a big area of investment for us.
Got it. That's helpful. Okay. And then Sarah, you mentioned before, I think we started the call, you got your sell side hat is still somewhere there. You can pull it off the shelf when you need to. And, as we talk about pattern recognition and about your peers out there, I'm curious from your perspective, who do you see yourself sort of comping most closely to, from either just a business standpoint or from, where you are in your life cycle? I know the company's called out Pinterest and Snap and some of the others and some of the IR materials. I'm kind of curious where you see sort of parallels or differences between yourself and some others that are out there.
Yeah, Nextdoor is a very unique platform. No one else does local. No one else has this local knowledge graph. Why, I've talked a little bit about why do people come here. They come to get trusted information. So that's why we work with over 5,000 public agencies from 10 Downing Street to, the local fire department. Right. They come to get help, get that local perspective, and they come to build real world connections. So this focus on utility plus community is different. Most social sites, like you mentioned, a Pinterest or a Snap or TikTok or whatever, but it tends to be you plant your flag and own your graph. Ours is local, but then a lot of it is about entertainment, frankly. Ours is very much a utility first move. Local is tough. It's tough because of aggregation. So if you look at how many people have come into the space, like Facebook came in with Facebook for Neighborhoods, and then Facebook left, because it's actually very hard to get started. That's part of, I think, why this network is a little bit of a slower burn, but it's also what creates a huge moat once you have it. Because once people are on and you have brand recognition and they're getting utility, they never leave. That's why I started with the engagement piece. In terms of from a business perspective, you could certainly start to talk about companies like Yelp maybe having some similarity. I think where we would say we're different from a lot of those marketplaces is we own both sides of the marketplace. Like what I find is a lot of those companies salivate at the consumer base we have, which I know is a big part of your thesis on why ultimately it will be an amazing monetization opportunity as well. So today we have 3.9 million pages claimed by SMBs, and we have many, many more where the page exists and has recommendations tied to it, but the business hasn't yet come in and changed it. And then finally, I would say, our go-to-market is different in areas like the business side, because the vast majority of why businesses come, they come organically. So we're not paying them to come. They usually start as a neighbor, and then they bring on their business persona. And because it's very self-serve to go sell them on ads, we don't need to build out a scaled sales team like I know Yelp did, for example. So I think it's a much healthier business model with a much higher gross margin. And when it's built, the ability to monetize it's recurring revenue effectively out into the future of your DCF.
Got it. That makes sense. I'm glad you pointed out Yelp, because that was one of my questions as well. And I know some investors have thought about that if they're thinking about bracketing sort of the peer set, maybe a Pinterest and Snap on one end and then a Yelp on the other. So that's helpful context. Well, look, maybe I'll give you a break, Sarah, from talking, have some tea, and to Mike for a question or two. Mike, relatedly to all of these topics, the KPI that investors tend to look at the most is obviously ARPU. And Nextdoor had been experiencing quite a bit of ARPU growth prior to coming public, and for several quarters thereafter, up until really back half of last year. The denominator, which we just talked about, user growth, and that ARPU has continued to trend pretty nicely. And as you mentioned, Sarah, it's 70% organic, but the revenue side has fallen short. You're obviously not alone there among these peers that we talked about, but someone could easily take a look at Nextdoor and say, look, if this platform is so under monetized, why, even with what's going on in this current environment in the digital ad recession, are ARPUs falling? And why did that happen? Maybe is it due to customer exposure, concentration, what? And then thinking about what the drivers will be to get back to bridging that gap with where you are versus your peers.
Sure. So I think I may explain through two different lenses. One, on overall revenue, but two specifically to your question on ARPU. I think what Sarah has explained this morning is where we think our platform is very differentiated, and really owning the opportunity to own the local graph and to be able to bring both utility and community to neighbors. Where investors should find comfort, though, is our monetization model is actually quite familiar. It's very similar to our peers, and I think we know tried and true. And we're very early in that monetization journey, and we'll talk today a little bit about the investments we're making in building our own proprietary ad platform, which is the next evolution of our monetization. But we are really focused on what drives monetization, which is engagement. And for us, that's the most important thing. So increasing the base of weekly active users, so having a large, unique audience, but importantly, bringing them back to the platform more regularly. So a lot of our investment has been in AI or a notifications program to bring the relevant content in front of neighbors at the right time with the right frequency, to trigger their behavior, to bring them back to the platform, and then engage them either in content or in getting things done on the platform. And that increase in sessions in the very short term has put some pressure on ARPU as an output metric, but we think is absolutely the right step to take to bring them along and encourage them to come to the platform for a variety of uses. Where we're putting equal focus now is on driving depth of session. So when we bring you back, rather than just engaging with the story or the headline or the for sale and free post, something that might have triggered you to come back, is to encourage you to explore other surfaces on the platform, both to it could be to react, could be to create a post, it could be to ask for a recommendation, to buy or sell something. And with that increased depth of session, that really creates more impression opportunities, which is the monetizable unit for our advertisers. And so it's really about that path. So making sure first we're driving the base of WOW, bringing WOW back to the platform regularly, and then now increasing the base of impressions. That's where you'll see the result really in ARPU. There are other things that we can and have done in the past to optimize ARPU. So things just like optimizing that supply. So making sure we're filling as much as we can when we've created those ad opportunities, making sure we're doing it in a targeted way. So the right advertising message to the right neighbor at the right time. So that's driving performance, and ultimately will help to drive CPMs up as well when advertisers are getting the result that they're after. And then things like owning the advertiser relationship directly. So as we've scaled our sales organization, this has happened naturally, where we've moved away from relying on third-party sources of demand, a backfill partner like AdX or Gemini, and really owning the advertiser relationships, which drives CPMs higher as well. And then I think just the sort of third opportunity are things that are unique to our platform. So we've called out in past quarters things like our Maps product, where we do things that are very on brand about a Halloween treat map, where neighbors can indicate where they're participating in the holiday, giving out candy, or a holiday cheer map where homes are decorated for the holiday. So those are all sponsorship opportunities. They're sources of engagement. In the future, they could be transactional opportunities or advertising opportunities where businesses can own a position on a map, boost their presence, indicate a promotion, things like that. So we're really excited about leaning into that map first experience, and that was part of the motivation of launching our Discover surface that we did last year. But I think collectively, those are the three ways where you can really impact ARPU. But first and foremost is driving engagement.
So it sounds like it's about, we sort of draw an analog to just a magazine or whatever, something analog. It's increasing the real estate against which you can serve ads, either by increasing the time spent in the app or increasing surfaces, as you said, in the app where you can deliver ad inventory. And it sounds like you're in the later innings of that as you've driven engagement higher, but obviously in the very early innings of then you've got now the demand side, now balancing it with the supply side of actually serving up targeted ads. Maybe you can connect the dots a little bit. And this is for either of you, a little bit about that, about rolling out the back end, further rollout of the front end, and then rolling out of the back end, and what that actually ends up achieving from the advertiser perspective. It is better targeting, which then gets bid on, is higher CPMs. Just maybe talk about sort of that evolution as you roll those out.
Yeah, I'll grab it for now. So think about the ad platform itself. You've kind of nicely divided into forward facing and then the back end that really we see. So on the front end, Nextdoor Ad Manager is the interface where all advertisers go to create an ad. So whether you're a super small business like the local dog walker, or you're a publicist, and you want to be self-serve, and that's the key, because we obviously have a managed option. We'll continue to have a managed option. But the big thing that changes with Nextdoor Ad Manager is it now fully unifies the front end for self-serve. Of course, the UI will change, right? Someone who's less sophisticated, we want them to actually show up and for the ad almost to be pre-created, right? We know why neighbors love your business. We know what other businesses like tend to do. We even might have the photos and so on. So in an ideal world, it's literally one click, and then you're kind of evergreen on the platform. And a lot of small businesses want to kind of set it and forget it. But we have definitely heard, I think where we are missing right now is with larger enterprises, they also want to do self-serve in many cases. They have more sophisticated marketing departments. The mid-market in particular, I think will do really well here too, because again, we don't want to be servicing all of the mid-market with direct seller, more white glove. It's much more efficient and better for our margin profile if we can self-serve that too. The second part that they'll get from the ad manager is kind of where you're going to, which is better ability to target. We'll make that more sophisticated for them. And then ultimately just better insights and metrics. Small businesses today on any platform, frankly, don't get great metrics. They get told impressions, but they're never really told that loop gets closed. Nextdoor is a place where I think we could do something much more interesting because you have that connection to in real life, right? The plumber who does an ad, and then I call them up and they ask, where did you hear about us, on Nextdoor, right? There's a kind of a very natural way to close, even if we're not, like the payment would be another way to make that loop close coming from Square. I know that well.
Yeah.
On the back end, Nextdoor ad server, that's a big unlock. Like that's the thing I'm salivating for, because that's the moment where we get to use all of our first party data. And the fact that we are as successful as we are will tell you just how good that data is already. And today we barely really kind of get to use it in any sort of sophisticated way, because we're having to do this kind of back and forth between Google Ad Manager and Nextdoor. We don't want to take our data to Google, and Google, frankly, is not built to be optimized for a local neighborhood ad network. So once we have NAS serving, we can understand, advertisers will be able to understand their audiences better. They're going to be able to optimize targeting and delivery. They're going to be able to increase ad relevance. For us, that should actually mean potentially less impressions required to get the same return on ad spend for the advertiser. So that means that we can be more efficient with our impressions and bring more people to the platform just with the same amount of impressions, even if we never grew them. And then, of course, you fit it better into the whole system. Like the phrase I say over and over again is the right ad to the right person at the right time is content, which is less true in a entertainment network. Right. And then, going back to, you kind of said it at the beginning, investors do love kind of youth, teenage, viral and so on. But I love our base. It's very broad. It goes from teenagers all the way up to like centenarians. And it's very kind of evenly split, by the way. We look much more like the US population, which is actually a rectangle, not a triangle, by the way. So there's the population of 50 and above is growing just as fast as the population of 0 to 18-year-olds. And where all the money is. Yeah. All the money, exactly. Right. The silver tsunami is real. And so, when we sell to an advertiser, we say, we know it's a real person, so there's no bots, and they're at a real address, right? We know where you live because you tell us that to join your neighborhood. You have high intent to buy. You're trying to do things like, should I buy an electric vehicle? Or should I, what should I do about wealth management? What are all the neighbors doing? And then finally, we can do this highly localized message, but done at scale. Like when advertisers hear local, sometimes they hear like local news and they think it's small. And we're like, no, we are big advertising, like the stuff you do nationally, but we get to put a local spin on it. So, an ad in my neighborhood will say, hey, X neighborhood, did you know that your neighbors are all moving to Xfinity? That is a very performant ad because it feels personalized. Right.
It's a great answer. It's a great segue into that build out of the back end, which I know you all are investing quite a bit on this year. And maybe that's actually a great point to ask the question on. Nextdoor is also unique and different versus, I think, the peer set and even just the broader internet space right now, in that you are being more managed, I think, with your investments, but you have expressed, look, we're not going to pull back. We're not doing riffs. We're not going to stop investing just because of the environment's changed. Maybe either Sarah or Mike, you can talk a little bit about that and what gives you the confidence that you're deploying these dollars in the most efficient way to build that out. Because given your margin profile, the business overnight, presumably it could be doing, 20+% EBITDA margins, but you're investing into things that you think are going to have an impact in the future. And so maybe some signposts or guideposts as to why you think that makes sense and what investors should be looking for and expectations around that.
Yeah, I can take that one. So I think before I even go in, I want to make sure that it's clear that we are very focused on expenses in the business and where we are placing incremental investment. So we really have made a big push to make sure that discipline exists through all areas of the company. And I think that's clear, and at least in our last several quarters, where there's been basically no not OpEx growth or even headcount growth. Now, your point is correct, though. We are investing in the platform and in the product. And I think it's really important for us to be doing so. We're at an earlier stage in our product evolution than our peers. And really to have the opportunity to the right to grab the opportunity in front of us, we have to make these product investments and meet the expectations of not only neighbors on the platform, but advertisers. And in particular, advertisers have been trained by our peers as to what an ad platform should and needs to do. And so there is a price to play and to be effective and to be a competitor for ad dollars and to deliver performance to them. So that's a very important part of the reason why we're investing is like we are in the ad platform. It's important to understand the scale of our company as well too. We're 700 employees today. About half of them, a little more than half, are focused on product development, and so that's really where we're investing incremental dollars. We will actually increase team size this year, but it's very targeted in critical areas like ad tech and in AI, which I know we'll speak about this morning as well. And so we're being very disciplined in where that incremental investment goes, but really feel like it's an important step to grabbing the opportunity in front of us. You asked a little bit about sort of what gives us the confidence in being able to do so. And so I think first and foremost, as I've talked about the proven monetization model. And so we know that there are attractive long-term margins in front of us at scale. And so it's really, we need to get to that scale. We're not going to cost cut our way into profitability. It's about building the top line and building the audience, our neighbors on the platform, and the base of advertisers. And we have great signal now that gives us confidence in continuing to invest things like advertiser retention. So we talked about in our last call, 90% of our top 50 advertisers we've been able to retain over the last 12 months. So those that spent 12 months ago are spending in the current 12-month period as well. And that's true across large enterprises, and it's true in our mid-market business. So that's one. On retention, that's a really important indicator. The other is just the growth of advertisers. So we're really doing a good job at adding new logos. We had been sort of beholden to a small base of enterprise advertisers in the past. We're now more than 1,000 advertisers across enterprise and mid-market, really bringing good diversity of advertising messages to the platform, and importantly, de-risking our ad revenue. So reducing concentration and giving us the opportunity to work with advertisers of different sizes across different objectives, whether it's brand awareness or direct response, and really building deep knowledge in verticals that we then can lean on to scale. And verticals also including advertising agencies, which is a way for us to drive additional leverage in building our base of advertisers.
When you, Mike, when you say at scale, people have different definitions of scale. Just to make sure I understand, when you say at scale, do you mean scale like there needs to be a higher scale of users against which to serve ads, or this is really about scale in terms of getting advertisers and having the platform ready to take on that load of advertisers?
Well, I think we've done a great job of building scale of neighbors on the platform. It's more than 80 million verified neighbors, and Sarah mentioned more than half of them weekly active. It's really building. It's when in having success in driving the engagement, it gives us more of that impression opportunity to bring to advertisers that will drive top line scale. And really, the top line scale is what then covers the investment that we're making in doing things like building our ad platform to be best in class, to take advantage of the first party data that we have. And it's really quite a virtuous loop there of being able to have the technology to drive the advertiser experience that then drives their performance and unlocks additional spend, whether it's from more advertisers or deeper spend by existing advertisers. So it is there is an important there is an important investment to happen to just unlock that, and that comes with scale of the business.
And when you look at just to finish out that topic, when you look across the margin profiles or cash flow profiles of these peers, who's sort of this path you're walking anyway in building out your ad platform, is there anything structural, any reason why Nextdoor wouldn't be able to achieve those margins or potentially even better margins, given your gross margins are substantially higher?
Yeah, we don't believe that at all. In fact, as you mentioned, our gross margins are better than peers at more than 80%. So we think structurally there's an advantage there at the top of the P&L that is allowing us to invest in product. But over time, having built the ad platform, we believe that the EBITDA margins are attainable as well, the same long-term attractive EBITDA margins It really is just it's top of it's the revenue line to drive scale, to deliver those EBITDA margins. And I think an important part of our message has been, while we are early in our stage of product evolution and product investment, we are focused on improving margins each year. Our guidance for the year was that EBITDA margin will improve year on year. It may just be a few points of margin gain, but we think it's an important step on the journey to sustainable profitability, and are committed then to increasing those EBITDA margins every year thereafter, and believe we have a plan to do that.
Got it. Great. I'll ask one more, and then we'll shift it over.
Can I say just one thing to put like a final kind of end on that? One thing I thought a lot about when I came to Nextdoor, I looked at what the comp set had, for example, raised prior to IPO. And if you look at Twitter, Pinterest, and Snap, I think Pinterest and Twitter had raised about $2 billion. Snap had raised $4 billion. Nextdoor pre-IPO, we raised $500 million. So the ability to kind of really lean in and go fast was not yet available to us. I feel much better today sitting with $575 million on the balance sheet. Second thing is, when we talk about the revenue growth, remember we were doing this, right? If you go back to even Q1, literally 12 months ago, our revenue growth was 50% year over year. There was nothing different going on in terms of internally at the company. And 12 months later, the good thing about like never underestimate a good crisis, or never, don't use a good crisis
go to waste.
Yeah, exactly. Thank you. We're much stronger because we were, as a smaller company, we had to kind of choose. So we picked the verticals that were endemic: real estate, home services, financial services. And those, we've had an ad tech market that's really kind of slowed for a year, but it won't slow forever. Right? Advertisers will spend again. And in the interim, it's caused us to very quickly pivot to get much broader in terms of the verticals that we face, and to get much broader in terms of the scale of companies that we face. That mid-market piece didn't exist 12 months ago. At the same time, we're 12 months further along in that ad tech build. And you might say, well, why haven't you done it? And it goes back to size, right? Mike just said it. We're a 700-person company, 350 people work in prod dev. A big chunk of them have to hold up the 81 million neighbors that come back all the time and keep adding to what they're experiencing. And so the ad folks, it's a small but mighty team. Now, what's helped, again, in the don't let a good crisis go to waste, is the ability to hire. We've brought people on, even just in the last 3 months, that we couldn't hire 12 months ago because they were at a lot of these platforms. Stocks were at an all-time high and people were doing really well. A lot of good folks have loosened up and they're kind of excited to come back and say, okay, what did I learn the last time I built this? And what can I do better? And of course, where you're about to go, so I'm going to give you the segue. You're now building in a whole new tech environment. Like, the beauty of technology is sometimes you don't have to just build what everyone else got to, because you get this ability to take advantage of these step function changes in tech.
No, it's a good point too. And I wanted to ask you about who you're hiring, where they're coming from, because really what you'd want to see, I presume what I'd want to see, is you're hiring people who've built a back-end ad platform before somewhere that's been successful. It seems obvious. So I'll shift it to, I want to get to some participant questions too. And so the last question, sort of I'll ask for myself and then shift it to participant questions. Both you and Mike mentioned at the start was AI, which is the topic du jour, which, look, I think excites some investors. Others will roll their eyes at it. It's not, and with some justifiability, I think it wasn't that long ago that everybody was a blockchain company. So just reading through a little bit deeper into what you said, I think to date, Sarah, about AI, it sounds like some of the functionality that you're using now is about making the feed more personal. It's all going towards driving higher engagement. And the thing, the analogy or the sort of parallel it drew in my mind, and I was curious if that's similar to how you're thinking about it, is when Facebook went from that chronological feed to the news feed, and everybody screamed bloody murder the whole time, and then very quickly got on board and realized it was a better user experience, and it obviously was very beneficial for advertising. Is that when you talk about AI here, is that what that is?
Yeah, that's certainly a part of it. So let's break it down. I love that you said, yes, everyone was a blockchain company. We were not, because to me, like, you have to be authentic. Like, does this technology really make sense for you? In the case of, so broad-based AI, it makes sense because we are a big data company and a unique data company. That's kind of the key. And when you hear people talk about building large models, you'll hear them talking all the time about the ability to also label the data. So our data comes almost pre-labeled by 81 million people, right? We're not going out to hire 100 people to label data. Neighbors label data by saying, this is a lost and found, this is a recommendation, this is moderated content. So it's a very unique data set. The second thing that's changed recently, I'm not going to talk, I'll talk generative AI in just a second, but it's just the expense to now use these large language models has really come down. It's a much more democratic way to go about it, whether you are building off, in our case, we've done an API out to OpenAI, Google is opening up, but there's a lot of open source out there too. And so companies like ours that couldn't afford to build a large language model like Lambda that Facebook rolled out or whomever, right now suddenly we get to take advantage of it. So it's still our data. It's held within our walls. We have an NDA, so it's not used further, but we're able to make use of just this model building. So there's kind of three areas that's really helping us. One is definitely, for now, multiple years, we've used our data to better personalize everything from the notifications we send, which have been a big part of why we grew 16% year over year. You talked about personalization in the news feed. Discover Surface is another place we'll do that, where of course, and the more signals we get, this is why we launch things like connections. On the advertiser side, everything I talked about, better targeting and so on, all of that is using data and it's AI. But shifting to generative AI feels to me like 2004, when suddenly people really understood the power of mobile, or even like, if you can remember the browser coming, like what it was like when you went from the internet being like this weird thing that DARPA and Stanford were doing to being like, holy shit, there's like this browser, there's Mosaic, right? So it kind of, generative AI, I think, made the rest of AI seem really cool and sexy all of a sudden because everybody could partake of it. And it's a place where I am quite excited for Nextdoor, because on the generative AI front, again, we are a user-generated content business. So it's very authentic and natural feeling. So we've moved fast. We've launched a couple of things on the neighbor side. One is an AI assistant. So today, when you create a post on Nextdoor, you'll see a little blue pill that says, hey, would you like us to rephrase this for you and make it more engaging? And it just rewrites your post based on what we know already performs on Nextdoor. And so if you're trying to get something done, which again, we're a high utility network, it just makes all the sense in the world. The second place we've put it into is moderation. So again, we already do something to slow you down called kindness reminder. And now we're offering you a constructive way to put that post together. Why that matters is the more welcoming the platform feels, the more likely people keep returning. So it's just good for business as well. Where I'm excited to go with it is definitely, the big platforms are already starting to talk about generative AI for creative, for advertising. Of course, that's going to happen. It's going to be super interesting to see what happens to ad agencies and so on. I'm probably more think of it like, when finance teams got Excel, it wasn't like the finance team disappeared. They just became a lot more sophisticated overnight. But I think for small businesses, this is a unique place for Nextdoor to play, because we already have a lot of data about your small business, right? We know that neighbors love your cupcakes, particularly the chocolate ones. We know that your business is perfect for a 6-year-old birthday. So our ability to pre-create the creative, like even the photos, plus the copy, plus the call to action, like we should be able to create that page for you, help you post, and then of course, help you do an extremely performative ad. And SMBs just have never had anything like this. I just had the head of the SBA was in last week. I worked closely with her during COVID when she was here in California. And she said every small business who she's talking to is like, oh my goodness, like my ability to create content is now suddenly off the charts. So that's great. Let's help them create the content, but then they're going to have to distribute it. And that's where Nextdoor comes into its own.
That makes a lot of sense. That's great. Well, look, I'll shift it to we've had a couple of questions come in two of which go back towards the beginning of the conversation to the user growth side. And I'll do my best to kind of merge them into one question. One part of it was trying to better understand if we, I hate double click, let's pinch to zoom into the organic growth of Nextdoor in neighborhoods where Nextdoor is already present, and kind of break apart the virality. So Nextdoor shows up in a particular area. How does the growth path look there versus just say going into new areas, more recently? And then another question kind of related to that is, again, drawing comparisons between Nextdoor's user growth and that of competitors. It hasn't been this hockey stick as we've established. Is that a good thing, or a bad thing? Because I think, Sarah, you pointed out that you've had, in the case of Snap and Instagram and some others, TikTok, as fast as those platforms grew, TikTok showed up very quickly and exposed some vulnerability in retention for those platforms. So maybe just a little bit more color on the user growth organically, and then the retention would be helpful.
Yeah, I mean, what we do know in neighborhoods, generally speaking, is as neighborhoods become more highly penetrated. So when you go down to the micro, and remember, a neighborhood is smaller than a DMA, smaller than a zip code, that the more penetrated it becomes, the activity is not linear. It becomes more exponential. Or a better way to say it is like you see about a 3x increase in weekly engagement. Yeah. When you go from kind of 5 to 10% of the neighborhood being penetrated to when you get up into kind of 70% plus. So it's a 3x, not just a whatever that line would be. And part of engagement drives that loop I was telling you about, drives virality, because the more people that are talking on the app, the more content there is for us to send out of the app to maybe hook you in different places, the more their ability is to get you to contact sync. So now we know who you know in the neighborhood, then we can go invite them. So yes, for sure, it builds on itself. It's somewhat a slow burn, but when it's there, it's very, very heated. And then I think that really speaks to the second part of the question, which is about your competitive moat, because this is hard to do. The cold start problem is actually hard. And what we have going for us is we have a playbook now. And so if I go to Canada, which is our most recently launched country, but really when we launched, it's a city strategy. In Canada, 4 cities really mattered in the beginning, and now we spread out across the rest of the country. If you go to Toronto, we have a playbook that says, let's take the TMA, Toronto Metropolitan Area, let's overlay it with what we can know about it from external sources like census data, for example. Now let's overlay what we know, because we are next door, about which neighborhoods tend to work better. I mean, it's where, honestly, where AI takes over. As a human, you turn it into hypotheses. You're like, where are the new movers? Where are the millennial parents? Where are the, is there a disaster or crisis likely to occur? Terrible way to think about it. Florida, because of hurricanes, tends to be very engaged. And then you say, okay, here are all the green neighborhoods that now we need to go really invest in. And that can be paid invitations to get it started. It can be literally boots on the street. So we might get a startup team to go there. It's getting, when we launched Toronto, we had the mayor, we had the Canadian Red Cross, we had the Canadian Mounted Police, and then we had a bunch of small businesses. And then that creates earned media. So then you end up on the morning shows or whatever. And so you get that flywheel going. But we have a playbook. So today, Canada was our fastest growth market, which is what you want to see, is that every time you do it, you get better and faster at it. And I compare it to Facebook, because here you have a behemoth. When Facebook launched Facebook for Neighborhoods, they launched it in Canada, and they launched in Calgary and I think in Toronto. And we did have a moment where we were like, oh, they finally figured out this is a huge opportunity. But they just weren't able to kind of tip. And what was cool was like, our neighbors were like, they got competitive. They were like, Facebook doesn't care about community. And so they didn't want it to work. And so, that even just that brand sentiment piece, and like, who's coming with you, like who is your community, that can be a huge competitive moat as well.
Yeah, it's a great point. We got a few questions actually about Facebook and the potential competition there and your moat and ability to protect it. versus Facebook. So you touched on the user side, and that makes a lot of sense that what users are using the platform for versus Facebook. What about on the advertiser side? Can Facebook flip a switch and go? They obviously have groups. They are everywhere. We got this question on SumZero. Can they just go and into these groups do a better job of keyword sort of search recognition and deliver up more targeted ads in these local town groups? To your point, they're DMAs, they're not necessarily sub-zip code, but so they're a bit larger, but can they do something there from an advertiser perspective, at least, cutting off some of the opportunity for Nextdoor in capturing those ad dollars?
First of all, the digital ad market is massive and growing, and it continues to take share away from old school media. So I as an investor, when I was on the sell side, I always preferred to be in the pond that was growing rather than being the big fish in the pond that was shrinking. That was never a good place to be. So I would just say, first and foremost, we face the digital ads market, and it continues to grow at a really good clip. I think secondly, what we really talk to advertisers about is incrementality. So they are I think 29% of the neighbors who are on Nextdoor don't go to Facebook. It's a much bigger number for platforms like Snap, I think is like 80+%. You get incrementality. Right. So advertisers just always want incrementality, like show me why you're different. And then that allows us to go back to then our 3 points. Number one, real people, right? We take the time to confirm it's a neighbor. So the issue of kind of bots and what they would term brand safety tends to be much lower. We know where you live, right? Before we get into all the other targeting, like, are you a pet owner? Are you a parent? Are you a car owner? We actually know where you live, which is an incredible overlay for any advertiser that's in the business of online to offline. So anyone that owns stores, anyone that sells cars, even financial institutions, like a lot of that just happens in real life.
Yeah, you not only know where I live, you probably know how much my house is worth and when I moved in.
Exactly. Right. We talk about, we talk about the fact that, that it's a little bit, we skew a little higher into home ownership, for example. The high intent piece really resonates for advertisers. Like they get, even for a Facebook who's, really good at this, not to swear, but I'm on an actual podcast. They're really good at this digital ad market thing. Like they kind of created it. But when I'm in my feed, what I'm seeing is things that aren't really relevant to what I'm having a conversation about. In Nextdoor, that's why I go back to the, social platforms are all created differently. In our case, we planted the flag, we own local, but then we're about the community plus the utility play, not so much entertainment, although there can be some good entertainment on Nextdoor too. And then I think the third thing is this neighborhoods everywhere, right? Even Facebook and so on, they can't target the way we do. Like they can't do that dynamic switch of like every neighborhood can show up with its name in your ad. So if you're Xfinity, and the reason why tech and telco has done so well for us, if you think about a telco player, if they are laying fiber or they're turning on 5G, the worst thing that can happen is they tell a customer, hey, come get 5G. And then the customer calls and it's like, not available to you.
Not yet in your neighborhood,
So they can have this super tailored message by street even that says, hey, it's here, come get it. Hey, it's coming. Do you want to be on a wait list? Or did you know, our network continues to grow? Like, so they can have this very tailored message across the Nextdoor platform with kind of the singularity of the brand message they're trying to carry, but with like the local precision. And that's really potent for a lot of advertisers.
And right now that's being affected by sort of a white glove service with a Verizon or an Xfinity. But in the next, year plus, that is a self-serve option to be able to do that.
Exactly. There's an advertiser in the UK that does home security. They are a very, they're probably the most extreme performance marketer I've seen. They will do 30 to 40 creatives a day to figure out what's happening. Why they like Nextdoor is they have to send someone to your home to install the system. So they've got a guy or a woman driving around in a truck, and it's better if they can get 5 people on the same street to sign up, because if they get 4 people across the metro, 5 people across the metro, they won't be able to service them all in one day. So for their margins, they're looking for densification, but they do it with this extremely, high turn performance marketing. So they don't want to be calling someone at Nextdoor to kind of, handhold them through their creatives. They just don't have time for that. So not every advertiser is like that, but I do think that more and more the ad world is moving to a lot of that as people learn the skill of better and better digital marketing.
Yeah, got it. Well, awesome. I'll ask just one more sort of linked question, again, aggregating a couple of questions that came through, merging them into one, and then I'll leave time at the end, Sarah, for you to close it out. This one's kind of more long-term oriented in nature, because if there's anything public investors are, it's long-term oriented, right? So we are getting a couple questions on international, which you touched upon, Sarah, in terms of, what is the strategy going forward? It seems like the UK has been a success. Is the company, in light of what's gone on just sort of more broadly, and Mike's comments about being more disciplined in spending, pulling back on international, or are there opportunities to get more aggressive? And then the second part, and I'll just add it in there so you can keep going on it, is free, for sale and free. And obviously there's a lot of GMV going across that marketplace that's largely unmonetized. It's a big business on Facebook right now. And so is that a big, monetization opportunity longer term for the company?
Yeah. So just starting on international, we are a global platform. We firmly believe that everyone in the world is a neighbor, so we have global applicability. If you look at, right now we're very focused on growth in existing markets because they're huge, right? We have, yes, we're very proud of being in 1 in 4 households in the UK, but I'm like, why aren't we in 1 in 3 or 1 in 2? And then when you think about economies like France, Italy, Spain, Germany, those are very big economies to go win, particularly when you think about it with a digital ad market lens. Frankly, we could have a ginormous, like tens of billions of dollars of revenue only playing in those markets. We continue to work hard in the markets we're in to drive awareness. Like, for example, in the UK, we just have come off a big volunteer effort on the heels of the King's coronation. In Canada, we did a partnership with Toronto FC, which is helping us think about sports partnerships, right? Community and sports tend to go very well together. We're seeing huge success overall, like in the UK, across international, over 50% of our verified neighbors are active weekly. It's actually higher engagement than we see in the US, which is probably somewhat cultural, frankly. And then if you look at revenue today, international revenue is only 6% of total, even though WOW's, it's about 20%. So there's clearly just room to grow even on that front. But revenue grew 38% year over year internationally. So we feel very good about that. On for sale and free, yes, like this is an amazing engagement opportunity for us. Today we see over $1 billion listed every month. And that doesn't even include the fact that over 20% of all the items on for sale and free are free, which has an element of community. We do monetize it through ads. Like, I wouldn't want to say that it's an unmonetized surface, right? Clearly, when you go there, if you do a search today, you'll see an integration we've done with a third party that's creating very contextual ads that are very performant. If you're just browsing, you'll see just more of our normal display type ads going in there. As the ad server comes up, it's going to benefit all of those surfaces in all the same way that I just described.
Got it. No, it makes a lot of sense. Well, awesome. I know we're coming up on the hour here. I want to leave it to you, Sarah, to close it out. One other question that came through from Divya at SumZero too, which probably is a component of what you'll touch upon, is just at this point, what do you feel is misunderstood about the stock, the opportunity? The company's been buyers, you've had board members that are buyers. Obviously, you think there is a misunderstanding. So maybe just touch upon that as you close it out.
Yeah. So first of all, thank you so much for hosting this. It's a really great format, and we're always happy to take more questions. But generally speaking, I think with Nextdoor, we're falling a little. I understand it with public market investing, right? In tougher times, you all have to control what you can control, just like we as a business control what we can control. And so it's easier to stay in larger caps where there's more liquidity. It's easier to turn to stocks that perhaps, are going to tell you a story of cost cutting and, where they probably did get quite fat, frankly, through the last kind of bubble, COVID, and of course, clearly massive government stimulus. Nextdoor, I think the story is we've been much more kind of steady state, right? We've told you from the get-go, we will control what we can control. We're investing to grow the platform. We grew WOW 16% year over year. I talked at length in the beginning about how we've grown from our COVID high. We're a very engaged platform, very differentiated. We're optimistic that the advertisers who were on the platform have stayed with us, albeit spending less because the environment is tougher, but they'll come back because we work for them. But it's allowed us to really kind of take advantage of that crisis to grow at a much more resilient platform overall. And then finally, I would just say we are laser focused internally, growing WOW, growing revenue, and just continuing to perform every quarter. We have a big balance sheet, we have a great team, and I'm super excited by what we do. It's important in the world.
Great. Well, we're excited to monitor the progress. I'm sure there'll be more questions that come out of this too. We'll pass along, but thank you both for taking the time here.
Thank you.
Thank you.